China's presence in South America's lithium industry has been steadily expanding, not as a future possibility, but as an observable reality in today's global economy. Over the past several years, Chinese companies and Chinese capital have increased their footprint across the region's lithium sector in a way that is broad, consistent, and increasingly structural. This is not a story about a single mine, a single acquisition, or a one-time investment. It is a pattern that spans equity stakes in lithium projects, long-term offtake agreements that secure future supply, and growing links to refining, processing, and battery manufacturing after extraction. In practical terms, lithium produced in South America is becoming more tightly connected to Chinese-controlled supply chains well beyond the mining stage. This shift is visible in trade data and investment flows that have continued to shape the market into the middle of this decade, not only in announcements or policy statements. Argentina offers one of the clearest examples of how this change has taken hold. As lithium production expanded, export destinations shifted alongside it. By 2023, roughly 43% of Argentina's lithium exports were flowing to China, marking a structural change in trade patterns that has continued beyond that year rather than a temporary fluctuation. This matters because lithium is not just another raw material traded on global markets. It is a core input for electric vehicle batteries, energy storage systems, and the broader transition toward electrified and low-carbon technologies. As influence over lithium supply chains expands, it directly affects price formation, supply stability, and the competitive balance across industries tied to energy and transportation. The key questions, then, are not whether this shift exists, but why it has been concentrated in South America, how far China's influence has already extended, and what this means for the structure of the global economy. To understand this flow clearly, it helps to step back and ask why South America became the central region for lithium. The answer begins with geography and resource concentration, rather than politics or short-term market dynamics. Argentina, Bolivia, and Chile together form what is often described as the Lithium Triangle, a region that holds more than half of the world's confirmed and estimated lithium reserves. This concentration alone places South America at the starting point of the global lithium supply chain. Within this triangle, however, each country plays a different role. Bolivia is estimated to hold the largest lithium reserves in the world, yet commercial production remains limited due to technical, environmental, and policy constraints. Chile represents the opposite case, with decades of experience in commercial lithium production and a well-established role as one of the world's core suppliers. Argentina has emerged more recently, but over the past decade it has recorded the fastest growth in lithium production among the three. Much of the region's lithium is extracted from salt flats, where lithium-rich brine allows for large-scale reserves and relatively lower production costs compared to hard rock mining. These geological conditions make South America not only resource-rich, but structurally competitive as a source of lithium. As a result, the geographic starting point of global lithium supply has become increasingly fixed in this region. This has led to a supply chain in which the earliest stages of lithium production are concentrated in a small number of countries. At the same time, it has created a growing reliance on external capital, technology, and downstream partners to move lithium beyond extraction. However, the mere concentration of resources does not, by itself, explain why influence over the industry has shifted towards specific actors. To understand that shift, it is necessary to look at how lithium itself has changed in economic meaning over time. Lithium is a critical input for electric vehicle batteries and large-scale energy storage systems that support modern power grids. As electric vehicle adoption has accelerated and energy transition policies have expanded, lithium has moved beyond the role of a conventional industrial material. It has become a foundational resource for technologies that underpin electrification and low-carbon growth. Unlike many other raw materials, lithium has few viable substitutes at scale, especially for current battery chemistries. At the same time, expanding lithium supply is neither quick nor simple. New projects often require years of development, significant upfront capital, and complex environmental approvals before production can begin. These constraints mean that lithium availability cannot easily adjust to sudden increases in demand. As a result, securing lithium has shifted from a question of short-term market access to one of long-term industrial competitiveness. It has also become closely tied to supply chain stability and national economic strategy. This shift has triggered a more intense global competition over lithium resources. The central question is no longer who extracts lithium at the lowest cost, but who can control access to it reliably over time. At this point, China's approach begins to diverge clearly from that of other countries. Over time, China has focused less on owning lithium mines themselves and more on building strength in what happens after extraction. This approach reflects a clear assessment of where value is created within the lithium industry. Rather than competing primarily for control over raw materials, China has concentrated on refining, processing, and battery manufacturing. These stages determine how raw lithium is transformed into usable industrial inputs and finished energy technologies. As this strategy accumulated over time, it translated into scale and concentration. China now controls more than 60% of global lithium refining capacity, placing it at the center of the conversion from raw material to battery-grade product. In battery manufacturing, the concentration is even greater. Chinese companies account for roughly 77% of global electric vehicle battery cell production, linking refined lithium directly to end-use technologies. This matters because economic value in the lithium industry is not distributed evenly across all stages. The highest value is generated in the middle and downstream processes, not at the point where lithium is extracted. South American lithium fits easily into this structure. Lithium produced in the region can move into an already established Chinese refining and battery ecosystem without requiring those capabilities to be built locally. As a result, many lithium projects in South America have become increasingly integrated into China-centered value chains. The emerging pattern is one in which extraction remains geographically dispersed, while processing and manufacturing become increasingly concentrated. In practical terms, resources stay in South America, while a larger share of added value accumulates elsewhere. This structure has taken shape gradually through investment decisions, supply agreements, and industrial capacity built over time. From here, the question becomes how far this strategy has already reshaped China's influence across South America's lithium sector. At this stage, that influence does not amount to full control, but it is steadily moving toward a more fixed and durable structure. What emerges is not a single point of dominance, but a recurring pattern across projects, contracts, and trade flows. Chinese companies have expanded equity stakes in multiple lithium projects throughout the region, allowing them to remain closely involved in production decisions. Long-term offtake agreements have further strengthened this position by securing future supply volumes before lithium reaches global markets. These arrangements help limit exposure to market volatility and anchor supply relationships over longer periods of time. Trade data offers another clear signal. In Argentina, roughly 43% of lithium exports have been flowing to China, highlighting one of the deepest supply and investment linkages in the region. This level of integration, however, is not shared evenly across all countries. Bolivia presents a different case. Despite holding some of the world's largest estimated lithium reserves, production and exports remain limited, constraining the scope of external influence. Chile follows yet another path. There, legal and institutional oversight has played a stronger role in managing foreign participation in the lithium sector. These national differences shape how influence appears on the ground, but the range within which they operate is defined by clear structural limits. For this reason, China continues to hold a strong advantage at the core stages of the lithium supply chain, particularly in refining and battery manufacturing. Within that structure, several variables remain open and subject to adjustment. National resource policies, environmental and social pressures, and the pace at which Western countries build alternative supply chains will influence how this dynamic unfolds. Even as these factors evolve, the more important question is where this shift is already beginning to reshape the global economic system. The impact appears most clearly along the core axis that links resources to industry, technology, and trade. Lithium does not remain a raw input for long. Its economic significance is created as it moves from extraction to processing, then into batteries and final industrial products. Across these stages, China occupies a structurally central position. Control is not exercised at a single point, but across the key bottlenecks that connect raw materials, processed materials, and end products. This configuration is reshaping industrial competition. The competitiveness of battery and electric vehicle industries is increasingly tied to access within a specific supply chain rather than to individual firms or markets alone. Capital flows reflect the same pattern. South American economies remain concentrated on exporting raw lithium resources. China, by contrast, captures a larger share of value through refining, manufacturing, and the accumulation of industrial know-how. Over time, this division shows signs of becoming entrenched. Refining and manufacturing facilities are capital-intensive and difficult to relocate quickly. At the same time, adjustments remain possible. Policy interventions and technological shifts can influence how this structure evolves, even if they do not immediately overturn it. This is the system-level context in which the current lithium transition is unfolding. Then the final question is clear: what this shift means for today's global economy and what it signals for the future. At the present moment, China's influence is best understood not as complete domination, but as control over the central axis of the lithium supply chain. This distinction matters because influence over the center of a supply chain often shapes outcomes more decisively than ownership of individual assets. From here, several paths remain possible. One trajectory points toward the gradual entrenchment of a China-centered supply chain, supported by existing refining capacity and manufacturing scale. Another path reflects continued efforts by the United States and Europe to diversify supply chains, reduce exposure, and build alternative processing and battery capacity. A third depends on how South American countries choose to respond. Policies aimed at strengthening resource sovereignty, adjusting fiscal terms, or encouraging domestic value creation could reshape how benefits are distributed over time. Each of these paths carries risks. Concentration within a single supply chain increases vulnerability to disruption. Geopolitical tensions can intensify economic pressure. Environmental and social conflicts surrounding lithium extraction may also slow expansion or complicate development. At the same time, forces that can moderate these risks are also at work. Policy diversification, technological progress, and gradual shifts in supply chain geography can ease, though not eliminate, structural dependence. For viewers seeking to understand where this transition is heading, certain signals matter more than short-term headlines. Changes in lithium policy across South American countries will be one such indicator. Investment trends in refining and battery manufacturing outside China will be another. Together, these signals will help clarify whether the current structure is being reinforced or slowly reshaped. The story of South American lithium is not a closed chapter. It is an ongoing transformation unfolding within the structure of the global economy.